What's up, everyone? It's the Wall Street Custodian coming back with a video here, and it's been a tough one, right? We have been bludgeoned. This has been the worst market since 2008, no question, and a lot of people say it's going to be as bad as that, or if not worse. If anybody's following what's happening out there in the macroeconomic conditions, it is brutal. I'm going to give you just a quick story of somebody that I know very well and his mother. 41 years working at a company, invested in her 401 or 403B. I'm not exactly sure exactly what retirement account she had, but just retired recently, did not move the money out of the account into something safe after retirement. Right, the account built up all the way from small contributions over 40 years up to $750,000. She had $750,000 in the account. He just told me what it's worth now, and it's in the low fours. Yikes. Ouch. You're looking at she lost a house value, right? $350,000. This has been brutal, guys, on everyone, down to people who don't even pay attention, like they don't know, they just contribute every week, to avid traders. This has been brutal, okay? So what am I doing in a market like this? I have my my high risk, my two high risk plays that I believe in for the next decade, which is that I think are gonna, listen, it's high risk, they could amount to nothing, but they could be amazing, and that's ILUS and that's BBIG, right? So I got one on the OTC and one on the NASDAQ, okay? But what else am I doing, right? My IRA, my other account that I'm investing in, what am I doing? I'm looking for safe, amazing companies. And the one we're going to talk about today, I think, is the safest of all. I think, and it's a tech company. I don't think you can get more safe than this company, like as a reliable wealth builder. And I think the title of this article says it perfect. We're going to read a little bit from this because I think the market has lost its mind on this stock. It is way oversold, and it's such a good value at these prices. We got to talk about it. Before we do, hit that subscribe button, help the channel grow, and hit the like button if you like the content, like the videos. I appreciate every single one of you. Check me out on Twitter, by the way. Very active on Twitter, really in the BBIG community, but I tweet about other stuff too. By the way, I'm keeping an eye on Weber, right? We've been talking about Weber in the past. Weber had a big move today. Looks like there's a possibility of a buyout coming with Weber. It popped like 15%. It's very high short interest. We could see big moves with Weber over the next week, but we'll get into that later. Without further ado, it's not financial advice. Let's get into this, all right? So, Googl is the stock we're going to talk about today, guys. Let's just take a quick look at the chart. If you look at this 5-year chart, guys, you can see back in February 14, 2020, when the stock dipped from 75 down to 50 with the COVID fears and just went on a nice move steadily up to November 2021 before tech really started having problems. Can't believe we're coming up on a full year since tech has been just dropping and dropping and dropping. Remember, tech started going down before everything else. This stock went up to about $150. Remember, it did split. It was higher. It used to be like $2,000, but they did a big split. So now it's more affordable for people. You're looking at this stock now with the current drop. This is the lowest I've seen it in a long time, under $100. This is awesome if you're looking to build long-term wealth in a safe, stable company and still like to see some good growth. You're looking at this stock being down around 40% from highs. That's a big drop for such a behemoth, amazing company as Google. Remember, Google owns YouTube and so many things. It's insane. Let's just take a look at what Google/Alphabet, right, that's the name, is into. It's a holding company which engages in the business of acquisition and operation, because they're always acquiring companies, guys. It's a big company, right? We talk about these smaller companies, these risky companies that are acquiring companies. We forget that Google is also an acquisition company, right? So it operates through Google and other bets segments. The Google segments includes its main internet products such as ads, Android, Chrome, hardware, Google Cloud. These are all things you know. Google Maps, Google Pay, Search, and the behemoth YouTube. And with YouTube Shorts exploding right now, with TikTok in trouble, I'm looking at companies that are gonna take down TikTok, and YouTube is already like embedded in everybody's lives, right? So YouTube Shorts, keeping an eye on BBIG with Lomotive, but for this video's sake, YouTube Shorts is making a big hit, in my opinion, on TikTok. Okay, so we also have the other bet segment consists of a business such as Access, Calico, Capital G, GV, Verily, Waymo, I remember when that happened, and X. Guys, this is a behemoth of a company, and it's at very attractive prices. So the title of the article is "The Market Has Lost Its Mind" when it comes to Google. Summary: despite the latest depreciation in its stock price, Google's dominant position in digital ads market should help the company to successfully weather the current uncertain economic environment. In addition, the expansion into new mediums, remember we just spoke about acquisitions, could help the business to thrive in a new global regulatory framework. The article highlights the potential catalysts that could help Google stock appreciate in the foreseeable future. Currently, Google is one of the most resilient businesses in the world. I will agree, too. It as hard as other stocks have been hit, this has been hit a little bit less, but it still is way down off its highs. And if you don't think that Google is going to go back to 150 one day, and you're patient and you want to put your money in something safe, you can't pick a better stock, in my opinion. Remember, it's not financial advice. So despite the macroeconomic uncertainty, the company has all the chances to continue to have a dominant position in the digital ads market. That's its bread and butter, this company. Think about how many ads you see on YouTube a day and all the other places you go. Every website you go to has an ad. Half of the time, that's Google putting those ads out, right? All right. It has more than enough resources to weather a major crisis, which we're seeing right now, and its latest initiatives could help it to continue to expand its business more, even in the current turbulent environment. While there's a high chance that regulators from both sides of the Atlantic would be looking for ways to break the company's digital monopoly, there's a small possibility that major regulatory risks will materialize in the short to near term. As a result, it's safe to assume that the market underestimates Google's ability to create shareholder value in the foreseeable future, since at the current levels, the company's shares trade at a discount to fair value of as much as 40%. I just said this, right? 40%. That's insane for a company of this size and stability. In the base case scenario, creating an opportunity to profit for investors. Cyclical decline creates new opportunities. It's safe to say the digital advertising industry is currently in a cyclical decline due to the turbulent macroeconomic environment. After relatively weak performances in recent quarters, digital advertisers such as Meta and Snap already publicly announced that they'll start laying off their people. At the same time, there's risk that the current cyclical decline in the industry would be prolonged to 23 due to geopolitical uncertainty and a more hawkish Fed policy, which in the end will result in a global recession. The latest forecasts already show that while digital advertising spending would continue to increase, the overall spending growth rate in the U.S. would decelerate in the second half of 22 and into 23, which we all are aware of right now, right? That's what's going on. We all see the writing on the wall. However, the good news is that despite all of this, it's safe to say that Google will be able to navigate through this turbulent period with relative ease, thanks to its significant war chest and greater competitive advantages than others. The company wasn't affected as much by Apple's privacy policy change that is forecasted to cost Meta $10 billion in lost revenue, and in quarter two it performed mostly better against its peers as it only barely missed expectations. On top of that, the company's search and video business, right, YouTube, right, continued to grow at an impressive rate. More and more people are learning how to make YouTube businesses, just like I'm doing right now with this channel, and I have a second channel. Lots of people are doing that, and who does that benefit? Not just us and people, it also benefits YouTube and Google, right? As the revenues for Google search and YouTube in quarter two were up 13% year over year and 7.34% year over year to $40.7 billion and $7.34 billion respectively. So let me just jump in here. I actually forgot about Meta and the Apple privacy changes and how bad that hit Facebook. That was devastating. Facebook used a ton of private information and data on people to focus ads to them. Google and YouTube aren't really affected as bad from those privacy policy changes. And that's important. If you look at Meta stock, man, it just keeps going down, down, down. And I think Facebook is on the back end. I mean, unless they do something with the metaverse like they say they're going to do, which is really, and he's pouring money into it over there with Facebook. If I had a choice of Facebook or Google, what to invest in as a cornerstone of my portfolio, it's a no-brainer. It's Google. It's not even close. It's not even close. So as the company is about to report its Q3 earnings results later this month, there's an indication that despite all the troubles that the industry is currently experiencing, Google would be able to continue to expand its competitive edge along with its market share in the foreseeable future. In addition to the pledge to invest almost $700 million in Japan by 2024 to improve its products and services, Google is about to begin monetizing YouTube Shorts in order to gain additional market share in the short video format field. And YouTube Shorts are exploding. On my second channel, I use YouTube Shorts a lot, and they really are pushing them out there, and they're great. They're quick. You get in, you see the video, and you're out. Like, people love that in this day and age. So as a digital advertiser myself, this guy says, I believe that it makes sense for the company to explore new opportunities in the short video format for several reasons. First of all, thanks to the rise in popularity of ByteDance's TikTok app in recent years. Boo, boo, TikTok. I hate TikTok. We all know that a short video format is an engaging way for users to interact with each other. According to different reports, TikTok revenue is about to surpass the revenues of Twitter and Snapchat combined later this year. Wow. Which is a sign there's an opportunity for monetization in the short video format, especially for a company like Google that already has a significant presence in video thanks to YouTube. Wow, what an opportunity, right? That's actually a good point. Right now, YouTube Shorts really aren't monetized. Creators don't make a ton of money on YouTube Shorts. They do help grow channels though right now, right? However, if they can start to monetize these, I don't know how they're going to do it. Maybe a quick ad, maybe you see a 5-second ad before you see the 30-second or 40-second video. Holy crap, that's so much money that Google is about to start pulling, because YouTube Shorts are exploding right now. And also, this excites me for my other high-risk investment, BBIG, because we want to take on TikTok, and short-form videos are exploding. So what an opportunity for Lomotive to come in and make a dent and build their presence as well. But back to this. What's also important to mention is that despite significant growth in recent years, TikTok has a major problem that makes it exposed to competition. That problem is the lack of incentives for content creators to continue to create short-form videos, as they don't generate a lot of revenue from ads and instead rely mostly entirely on sponsorship deals from which the app doesn't take any profits. And this is actually a very good point. On TikTok, they've barely pay their content creators. There's one guy who was like one of the biggest on TikTok, and when they showed how much money he made, it was a joke. You know, he makes a lot from sponsorships, but what he actually made from the revenue, it was a joke. Meanwhile, on YouTube, you can come in, partner up with YouTube, build a channel up, and actually make a decent little side income, even with a small channel like mine that I have. You know, like my channel, I can make a couple $100 a month on my channel. Last month, I think I made like, $300. That's a nice little side income. It's a lot of work, and you have to build it up, and it's hard to build a business right now, YouTube business. There's so much competition out there, but if you have the dedication and the wherewithal, it's great, and YouTube takes care of you. They don't screw you, and now they're gonna monetize shorts. That's huge. That's gonna make more people want to start channels, more people expand their channels, and who benefits? Not just people, but YouTube as well. What a business, what a behemoth Google is. So check this out. So it says here, while earlier this year TikTok announced a 50% ad revenue share program, the program is covering only a small portion of content creators. Considering this, there's a high probability that the short format video creators at the very least would be interested in exploring what Google has to offer them with YouTube Shorts. From what we already know, Google plans to pay 45% of the ad revenue to those YouTube short creators who have over 1,000 subscribers and 4,000 watched hours. That's the big milestone to get over, and the hardest thing for most channels to get is to get that 1,000 subscribers and get all those watched hours. But if you're dedicated, you can do it, and you can make 45% of the ad revenue that'll be generated on YouTube Shorts. At the same time, the company's management in the latest Q2 earnings call said that the initial results of the YouTube Shorts monetization program were encouraging, and that the program itself will be launched at the beginning of 2023. If Google manages to successfully launch the program and lure in a large portion of TikTok creators, oh boy, then the company would have new opportunities to accelerate the growth of its video advertising business, which should result in the creation of additional shareholder value in years to come. That's just the beginning. This company is a behemoth, and in my opinion, you can't go wrong. Any dollar you put in here that you plan on holding, that you plan on investing for the next X amount of years, even just a short amount of time, 3 to 5 years, even 2 years, hopefully we bounce out of this. This is just a great opportunity under $100. I love Google as a company. I just think it's an amazing model they have. Think about this, Netflix, right? To make all their content, think about what it costs to make a movie and shows and Stranger Things, what it costs to make that content, right? Now think, and all the content they have. Now think about YouTube and Google. Google has tons of content. How many YouTube creators make their own movies and their own shows and stream and finance videos and whatever, all kinds of content. And what does Google pay to create that content? Zero. They just split it with the creator. It's genius business. It's a genius business model that I just think is primed for years to come. This is an overreaction in the market as everything's selling off with the fears. As we will bounce out of this, I have firm belief in that, and Google will be one to ride the wave back to the promised land. Guys, I hope you appreciate this video, and if you do, hit that subscribe button. I'll catch you in the next one.